Hello, markets in 2018 were in many ways dominated by the US, its stocks, its earnings and its economy. But how will that dominance play out as central banks unwind their balance sheets and volatility darts onto the scene? Where might the opportunities lie? What else should we be watching for in markets across the world in 2019? Well, with me to discuss the themes of 2019 are Portfolio Manager Eugene Philalithis and Investment Director Kasia Kiladis. Welcome to you both. Kasia, now you focus on the US, and of course it has led the way in 2018. How much do you expect that to continue in 2019?
Well, I think most people expect a slower pace of growth. So I think that's already embedded in. But I think people are far too negative about the risks and the slowdown, because we still will have plenty of fiscal policy to take us through. And of course, we'll also have the consumer tax cuts coming in early 2019. And what that'll do is that'll increase consumer spending. And we know in the US, consumer consumption is the key to growth in the economy.
Huge part of that economy. What about Eugene? How do you feel about the US in 2019?
Well, I think the 2018 until the fourth quarter really was a continuation of the themes we saw in 2017, with very strong growth, very strong performance from US markets. But I think we've seen quite a lot of volatility, especially in the fourth quarter, and especially in the tech sector, which I think has been a bit of a wake-up call for investors, in the sense that very strong low volatility growth and strong momentum from those stocks might be called into question, which will, I think, have broader implications for how investors are positioned within markets overall and how they view the US relative to the rest of the world.
Well, we'll come to those tech stocks in just a moment, but thinking about volatility, because there has been a spike towards the end of 2018, how will that play out into the coming year?
Well, I think when we look more broadly at asset classes, we think that there are valuations are quite extended in some areas, and so returns from markets in general, so the market return that you would expect over the next few years is likely to be lower than what we've seen over the previous years. So in an environment where we expect low returns and central banks are continuing to normalize policy, so the Federal Reserve will continue to raise rates, even the ECB is likely to raise rates at some point in 2019. We think that will lead to a pickup in volatility. So with low returns and higher volatility, market returns will be less a driver of total returns. So that volatility pickup will continue, and so in that sense, it makes sense to be quite diversified, look for opportunities across the world, but also look at how you can position your portfolio with a full toolkit of hedges, your currency exposure, allocating to uncorrelated assets like alternatives, or even defensive assets such as US treasuries or US investment grade.
It's not just as simple as it used to be, is it? Because the FANGs, the tech stocks, they really did dominate everything in 2018. What would the picture be, do you think, as we go into 2018?
Well, I think with the FANGs, it's really interesting because we knew that they drove the market really in 2017 and really up until 2018, until we saw that spike in volatility. And we were always mindful of those risks, because can that growth of the FANGs be sustainable, with certainly a lot of risks on the horizon, from regulation to data privacy. And what started in Europe in terms of taxes and data privacy has now seeped into the US. Even the US administration has become a little bit more, I guess, sour on Silicon Valley. So we're starting to see those risks grow, and the market is seeing that. And I think that's good, because we will have a broadening out of the opportunity set. But I think we have had a period of low volatility, an extended period of growth. So I think investors are kind of on tenterhooks right now in terms of, well, are there risks, and are those risks multiplying? What's going to happen to the FANG? What's going to happen with the Fed? And in October, also, the Fed has accelerated their balance sheet reduction. So again, all these risks are in play, and that's going to see volatility come back, which shouldn't be unique, because I think 2017 was really the aberration in terms of low volatility. I think we have a return to norm, and that broadens the opportunity set for investors.
It's a healthier situation, perhaps, for the world to be in.
Perhaps.
And I think also, in addition, when you look at the the makeup of volatility in the US market, you had the FANGs, the tech stocks, which were particularly exhibiting low volatility. That continued ramp up in prices meant that they were, and because of the size that they had, they represented in the US market, they were dragging the overall index down. So if there's a reappraisal of their dominance or the outlook for their for their profitability, their earnings, then that should result in overall market volatility rising as well, even though the rest of the market was maybe exhibiting more normal levels of volatility when you exclude the FANGs and the tech stocks.
So an under distortion there. But let's move away from the US. Where do you see opportunities in the months ahead?
I think many of the opportunities will be when we look at 2018, some of the areas that were beaten up because of withdrawal of capital, because of repricing of risk premia, they look to be some of the areas that we favor in 2019. So emerging markets stands out as one. Asia high yield as well is an asset class that has really suffered in the first half of 2018 and is now exhibiting better valuations, attractive fundamentals in terms of corporate balance sheets and leverage data. And so in 2019, we think that asset class could deliver attractive returns, and it is, it's offering a very attractive yield at the moment, which is relative to other parts of the fixed income market quite appealing for us.
And Kasia, back to you finally. What would be the surprising things for you in 2019? Where would investors find interesting returns?
Well, I think the US market has been very polarized in the past with, as we spoke, the FANG names monopolizing majority of the market returns in 2017, 2018 until recently. So I think the biggest surprise will be a continuation of US growth, but also in those unloved sectors that we haven't seen really grow to the same extent that maybe now with the fiscal policy still intact, we could see those opportunities begin to rise. And I think any type of positive surprises in terms of the outlook for trade. So if the Trump administration starts to maybe normalize some of those trade disputes, then we should still see some positive upside from that.
Okay, so perhaps having to look a little bit harder for it than in the past. But
Yes.
Kasia and Eugene, thank you both very much indeed for joining us, and thank you for watching. Goodbye.